Hello, ladies and gentlemen. Greg McCluskey from ForexLive.com. This is a post-unemployment report. We're going to take a look at some of the major currency pairs. Let's get started. We all know the data. You can go to ForexLive.com and take a look at that. The price action is what we're focused on here in this report from a technical perspective. And looking at the euro versus US dollar on the hourly chart, the market was trading right around the 60 level pre the report. That level had a number of different swing lows through here and swing highs through here. We moved above that level, or moved to that level yesterday's trading, breaking above the 100 and 200 hour moving averages in the process. And in early trading today, the market stayed in a very narrow trading range above that level until the report came out. Much stronger jobs report sent the price down to test the 200 hour moving average. It's a green line in this chart at 1.07312. And we found the support buyers against that level. Why risk can be defined and limited against level. So buyers came in. They did push the price back toward the 60 level, but we found sellers, and we're currently trading at 107.45 as I speak. So we stay between the 60 level on the top side and the 200 hour moving average on the downside. Traders are still battling with a more bearish bias here in the euro versus US dollar. We'll see if the sellers can remain, the dollar buying remain in that currency pair. Let's take a look at the dollar versus yen on the hourly chart. And similar to what we saw in the euro versus US dollar, the price was sitting near a support level here before the report. Around the 138.73 level. That level was defined through different swing levels through here, and then a support level through here. We fell below that level in trading yesterday, but then reestablished support somewhat near the low of it at 138.73 in trading here today before the report. Again, the price was holding that level, or trying to hold that level. I was waiting for the next shove, and the shove pushed the price back up to the upside where the 100 and 200 hour moving averages come in at near 139.60 level. Both of them are converging. The price will need to get above those levels to increase the bullish bias in trading here today, but we are currently trading near 139.28, just below those levels by about 30 pips, 32 pips or so. The short-term bias remains a little bit more tilted to the downside, although you can argue that the price correcting off the high price didn't get anywhere near the 38.2% retracement. So, it's fair and square here for the dollar versus yen. If the price can get above those two moving averages, the bias would turn more positive. If the price moves below this swing area, we look toward the 38.2% retracement in between. The battle is on in this currency pair. Let's take a look at the sterling versus US dollar next. And again, off the hourly chart, we see that the price was centered around the swing area through here, where we had a floor and then a ceiling and then a ceiling in trading yesterday. And today we were in a narrow trading range before the report, and the price moved to the downside. That low price in trading off of the report came down to the 50% retracement at 124.93, moved just a little bit below that level, and have seen the buyers return back in, currently trade in between this swing area and 61.8% retracement and the 50% retracement level. So again, similar to some of the other currency pairs, the market is somewhat neutral with the price trading in between this support and resistance level, looking for the next shove in that currency pair. Let's take a look at the dollar versus Canada next, and we'll look at the hourly chart as well. And I had outlined this swing area down through here as a level of importance for traders. You can see the reasons why through here, and then we came back, we moved above that level and then returned to it here. And in trading here today, the market moved down to that level, found support buyers, came up to the 61.8% retracement of the May trading range through here on the move to the upside, and found willing sellers against that level. So, these technical levels are holding in some of the currency pairs on the initial moves, and we've seen a rotation back to the downside. What else can I say except support at 134.04, resistance at 134.43, currently trading in between those levels as the dollar versus Canada. Finally, let's take a look at the Aussie versus US dollar. And the price action in trading here today has been more to the upside here. We've seen that price move above the 100 and 200 hour moving average, and yesterday moved above the 38.2% retracement today. And before the number, we came up and tested a 50% retracement at the 0.66736 level. The price, the reaction off of the better than expected non-farm payroll saw the price move back to the downside, but stayed above the broken 38.2% retracement at 0.6595 level. Currently trading near this swing area and below the 50% retracement level. Need to get above that level to increase the bullish bias for the Aussie versus US dollar. That pair is being supported a little bit by the reaction in the US stock market. We're still seeing stocks move higher with the Dow Industrial Average up around 210. The Nasdaq Index isn't as strong with a gain of 44 points at the moment. The S&P is up 22 points. Remember, the 100-week moving average on the S&P comes in at around the 4,200 level, a little bit less than that. Last week we closed just above the 100-week moving average, and this week we're looking for the second close above the 100-week moving average. We'll see if that holds up. Two-year yields are higher by about 8.7 basis points. It was up about 10, 11 basis points at the high. Trading at 4.42%, and the Fed funds expectations remains favored still for a no hike in June. We'll see how all of that plays out. My name is Greg Michalowski. I hope you found this report interesting and useful. Good fortune with your trading. Bye bye now.